But let's keep it then with the CapEx theme because we have seen a revival kicking in. Have the government spends boosted the overall CapEx cycle? What's the on-ground demand looking like? And what is the outlook when it comes to KEC International, which has been a buzz of late when it comes to their project pipeline? Vimal Kejriwal is the managing director and CEO of the company and now joins in on the show. Thank you so much for taking time out, Mr. Kejriwal. To begin with, there is evidence that after a massive lull, now we're seeing a smart pickup in the CapEx cycle. I want to understand from you, what is the on-ground situation? Are you seeing an improvement in demand?
Good morning, Aman. I think that clearly we are seeing an uptick on the demand. And for an example, if you look at a tender pipeline with what we are quoting and what we are quoting now is more than 1 lakh crores. If we have never seen such sort of numbers on the ground, both in India and also in international, especially in the Middle East.
Okay, but what about, some of the concerns on ground? The fact that we're seeing inflation that's continuing to soar. You're looking at a fairly high interest rate environment, high logistics costs. There's geopolitical concerns. Is that going to be a spanner in the works?
So as of now, we have not seen anything. Let me put it this way, that with whatever tenders we have had or whatever discussions we have been having for the last 6 months, not a single project has been dropped on these concerns as of now. Today, if you look at the capital goods or from the industrial side, our basic demand is coming from cement and metals, steel, zinc, aluminium, copper. Now, as of now, none of the projects or none of the tender discussions have slowed down. I don't know what will happen in the future, but as of now, it is pretty bullish, both on the industrial and surprisingly also on the residential side.
Mr. Kejriwal, hi, good morning. This is Anisha also joining into the conversation. Well, yesterday your stock surged as much as 10% and the volumes were at record high levels. And we were wondering whether there is something interesting happening in the company that the street should know about as well. But overall, talking to you about the margin picture, because at least the good news is that prices of commodities have come off, whether it's steel, aluminium, copper, etc. Now, I know you can't give us a number, but directionally, do you think this will have a positive impact on the margins, which were under pressure on account of the supply side issue?
Good morning, Anisha. So I don't know what happened with the stock. There is nothing which I have to describe or say anything, because if there was anything, we would have definitely informed the exchange. Okay. As far as the raw material prices are concerned, very clearly the headwinds are receding. We have seen a significant downtrend in the prices. Steel prices are down by 10,000 rupees. Aluminium is down by 30%. Copper is down by almost 30 or maybe around 35% from the prices. So clearly there will be definitely a positive impact on the numbers going forward. Clearly our Q1, Q2 numbers are already committed because costs are there. We have already incurred, we have bought material or orders have been placed and all that. So we clearly see that the impact or let's say the tailwind coming from lower prices will start reflecting in from Q3 or something. The other thing what you have to also understand is that we did get almost 4,500 crores of orders in Q4 last year. We have already announced 2,300 crores of orders in the last few months, and we are large L1s also. So many of these orders were taken at a time when the raw material prices were higher. So once the execution starts on these orders, then also we will see some tailwind on the margins from these orders coming in.
Kejriwal, if I can ask you, I understand that when it comes to the domestic infrastructure, the tailwinds are quite strong, whether it's railways or your civil business or even your T&D business. But when it comes to the export markets, how are things looking as far as the international business goes?
Export market, what we are seeing is that the nearby countries like Nepal and Bangladesh, which are large markets for us, continue to do well. Middle East continues to do well on the back of the oil prices. I've never seen such a tender pipeline in Saudi or let's say Abu Dhabi. Where I can see a clear impact is Africa, which is more multilateral dominated and some funding, etc., where we are seeing a pressure. So Africa is a little bit dry in terms of orders and tender pipeline. So is, I'll say, Far East, Thailand, Malaysia, etc., where the number of inquiries are going down. But they are more than adequately compensated by Middle East. And also one more surprising is North America, which is basically United States. Like our Mexico plant was not running at full capacity for the last 3-4 years. And suddenly we find that we have orders for 18 months and all of them coming out from United States in the power sector.
Morning. This is Nantar also joining in on the conversation. Now, the Russian-Ukraine war has led to a lot of countries looking inwards. Pipeline orders, whether in India or even in the Middle East, are supposed to be on the rise with tenders out. Are you targeting this business? Is it a good extension for you? This is what you do.
So, Rayanta, if you're asking for oil and gas pipelines and all that, yes, we did acquire a company last year, and we are clearly seeing a larger number of inquiries coming in, especially in India. Okay, suddenly we are finding that the government is becoming more keen on the gas grid, etc. There have been some inquiries coming out of Middle East, but we clearly see that this business will grow. And related to that business also is the T&D in Europe. We are also now finding that suddenly there are much more inquiries coming in from Europe for power T&D lines and all that. Maybe it's to do with the gas disruption which they expect and all that, and they want to either restart their thermal power plants or whatever it is. But we are also seeing, like US, we are also started seeing inquiries from Europe.
So, with an order book of 28,000 crore rupees, with this disruption, the war, which is now leading to, countries looking inwards, making sure that they're self-reliant, the oil and gas pipeline orders that you're talking about as well, what can it do for your business, for your order book?
So right now our order book plus L1 is just about 30,000 crores. Okay, so that's one part of it. Oil and gas for us was a very small business. Let me put it this way: last year we did a revenue of around 175 crores, and this year we are targeting probably 4x of that. And clearly we are seeing that oil and gas would become a very large, oil and gas pipelines would become a very large business for us. And hopefully in a couple of years, it should maybe, run into 2,000 or 3,000 crores.
Back the guidance for FY22 from 10 to 15% revenue growth, earlier to about 8%. Going forward, you seem very optimistic about things picking up, the order tendering looking strong, execution. What is the outlook in terms of FY23 revenue growth targets?
FY23 as a whole, we are definitely looking about a 15% plus growth in our revenues, because with an order book plus L1 of 30,000 crores, we will definitely have to deliver that much revenue growth. Otherwise, the projects will start lagging.
I'm sorry, sir, if you could just repeat that. What is going to be the guidance? I missed that in terms of your order, your revenue. Is it 15 to 20% growth?
15% plus growth.
15% plus. Okay, fair enough. What about the outlook when it comes to the railway segment? Because there's clearly been a deepened presence in technology-enabled areas of urban infrastructure. What have been some of the recent order wins here? How are you seeing the railway order book growing?
So last 2 years has been a little bit low on the railway order intake. However, this year already order intake plus L1 is almost 2,500 crores, which is equivalent to what we had got last year. So we do, and many of them are in the metro sector. Some of them are also in the conventional railway, again, on the technology side. We are L1 in one of the train collision avoidance system. Then we are L1 in some of the what we call mission Raftar orders. So I think on the conventional side also, we are slowly graduating into more technology-oriented orders. And on the metro side, BLTs and signaling and all that. So I think we are pretty happy. We do expect that railways will show a turnaround. Last year, we grew by 13%, and we touched almost close to 4,000. So hopefully this year, we should be able to maintain or improve the growth rates.
What about the balance sheet situation? I know net debt has been something which has been going down for you, but going forward, what's the outlook? And more importantly, how is the working capital shaping up? If you can give us some colors in terms of how the working capital days have trended recently.
Working capital, something which we are still a little bit worried about. We were expecting that there would be a major improvement happening, but then even in the last time I said that the improvement is shifting to Q2. So I think by Q2 end, working capital should be majorly under control. Right now, it's better. I'll say it's almost similar to March, but I think we do expect that by Q2 end, that the working capital will come under control. However, the caveat is that the interest rates are rising. So I don't know what would be the impact. There could be some negative impact on the interest cost because of the rise in interest rate, because we borrow both in dollars as well as in rupees, and both the places, both rates have gone up. So there could be a negative impact on the rate side. But on the absolute working capital, I think from Q2 onwards, Q2 or end, we'll start seeing something better on the working capital.
Okay, Mr. Kejriwal, we're going to leave it at that. KEC has been one of the biggest buzzers this week in the market. Kind of price move that we've also seen backed by volumes. You're hearing it from the top management itself, the benefit of prices coming down. Oil and gas is to be a big business also going forward, and how they're sticking with the guidance.